All right, ladies and gentlemen, we're coming into the third week of June. This is your watch list for June 20th, 2019. And where do I start? We had the Fed day. The expectation happened, and so did ours. And by that, I mean the expectation the market had, the rates were left unchanged. But now the resulting effect of kind of what we were going to see, it occurred. And now we have to talk about what is going to happen tomorrow. And now we have a whole set of different plays on this watch list because today was very interesting and it led to stuff. So I'm going to go over what happened today briefly, but I'm tying it into the keys for tomorrow that you guys are going to see. I'm going to go over the main stocks that you need to watch because there's a lot of unique catalysts, as you guys will see here. We'll talk briefly about Kern. If you guys saw that, we made a very nasty move. Well, the stock did. We were just lucky to be right there. And I'm going to go over as quick as possible the play I shared today. And it was literally, I made the play in the beginning of the week on Monday. If you saw the SPY put, one of those, that play was more realistic one where it was pretty much around $250 or $500 risk. I only did $250, but a $500 risk that would have net $500,000 on a covered put play. And what I mean by covered, I'm saying is spread. So it's pretty cool. It's pretty unique. I did one today, so I want to share that and explain it a little bit with you guys. And that's pretty much it. So let's get into it. But before I do that, you need to do the most important thing. You need to post your watch list below. What stocks are you watching? Long-term, short-term, doesn't matter what it is. Give us some context to it, but put it there. We're going to go over this on stream. And you guys, a shout out to chat, man. You guys are awesome. We had, 1,300 people watching there for the Fed meeting. A lot of people were in the game. A lot of people were even jumpy too. So that's why we put out these watch lists so you guys could get an idea. This is putting you in that mindset for Monday. So be there. It's pinned in the comments, youtube.com/the stock market. We are live Monday through Friday, 30 minutes before open. There is your daily brainwash. But lastly, please, if you guys haven't seen, you need to post your watch list, but like the video, interact with it. It'll make sure YouTube is going to show you my videos. You've probably noticed if you did like my videos yesterday, you're getting to see the more relevant content literally targeted to what you're looking at. We have so many videos on this channel, so if you're not interacting with it, it's very hard to tell YouTube to show you this or a penny stock technical analysis strategy. So I'm sure with where the market's at, you're going to want to hear what we have to say here and pay attention. But even then, man, we're making penny stock gains on CERN or Kern, whatever you want to call it. But let's get into the keys. This is for today, but I want to go to yesterday. So updated last 5:44 p.m. yesterday, I said the treadmill. A lot of movement to go nowhere. And this is what I thought was the funniest because today, even when it was coming down, it just had this monster rip. The volume was decent. It was slightly above average, 78 million. And you could even compare it to yesterday, just below there. And, yesterday the volume picked up. But as you see, volume is literally picking up. So now get ready for these moves to occur. You could kind of see what happens here when volume, just in general. But I think the activity was muted. A lot of weird trade blocks throughout the day. But this was the part I thought was funny. A lot of movement to go nowhere. We only closed a 0.1% higher on the Dow, 0.5% on the NASDAQ, and 1/3% on the SPY. So all of that, we really didn't do much. So why is that important? Because that's the key for today. It's stepping off of the treadmill. So if you guys have ever went on a treadmill, you walk for a while, you get off, it feels a little wobbly, like you're like on an elevator, your legs are jelly, and that you're kind of just like on autopilot walking. But depending on how fast you get off and kind of even if you're going downstairs right away or whatever, again, downstairs, upstairs, depending on what you have to walk over and where you have to walk to, depending on how fast you do that, the velocity, you could lose your balance and you could fall. So that's kind of the situation from here. We did all this. Now we're stepping on the treadmill. So it's going to be wobbly in the sense that we could expect some of these moves intraday. And I have a few scenarios that we need to discuss. But in general, if it does this volatility, that will be great. But the point I'm really looking for, if it does do this, it could cuck us. But if it drops and then, again, think if you move too fast, if it moves too fast, then it's going to bring us into those levels that we were talking about. Again, that last Tuesday, if we break below here. So it's going to be interesting. I am going to keep my eyes out for the volume, but here's what we have also. I'm also waiting for oil to drop because now it did a little bit today, but not much. The real story was the SPY and oil kind of reacted, but give it a few days now. It could either be tomorrow, the next day, or even coming into next week. But watch that because if it shows signs, that is still one of those keys because everything could be said and done, but again, it's also related to the Fed today. We have to really talk about that, but even the price of oil is one of those headwinds. They look at inflation with oil and food as major costs. They'll even exclude them sometimes, but the fact that oil's doing what it's doing isn't going to help. But The worst case scenario I could see happening, and I mean for a big drop, is that we get a gap up and we sell off, but this time it's a real sell off. So it could be a hard rip up and then a really hard rip down. And then if it does a rip and sell off, depending on how bad, if tomorrow's really big, again, back to the wobbliness of the treadmill, and if it falls over, that will be the deciding factor for how bad Friday is. And then again, worst case scenario, another down day Friday. So if we do get Thursday, Friday, but even then, for the down Friday, down Monday, Friday will be pivotal. So that's why tomorrow either it's going to make the move coming into Friday and stall Friday, or it's going to make a move today, and whatever move happens today will be reflected on Friday, kind of the mirror. But given Powell's statements today, the ball is in Trump's court, not to fire him, but to handle some of these issues. Now, we even talked some theories as, I truly believe Powell knows what's going on, and this is important because it's what he said today. If you guys listen to what he said accommodative. You guys were making fun of him in the chat. That dude was he was speaking in cult code for you. He was telling you, hey, man, listen, so, like, yeah, you know the situation. Well, like, we going to accommodate you. He's like, I got you, bro. I got you. He's like, I can't say much, but I got you. That was a confirmation for cutting the rates. That's probably why it was so annoying for you guys. Like, why does he keep saying that? Because he could only say so much. And he was saying that pretty much if anything bad happens, they will cut the rates. They're not going to hesitate to do so. And they even removed the word patient from the FOMC outline when they released it. They were saying that pretty much they're ready to go and they're watching this situation closely. And he said there's just all these headwinds that develop so fast into July. He pretty much signaled July. He said, hey, yes, we will cut by July, but he said it's the economic, the trade, and all that could affect the economy. And he said, really, we're going to see how it plays out to July. Some people are saying it's going to be the G20, but that would be, again, adding more weight towards the trade war again, and that's kind of insanity. That's kind of playing back into this whole, okay, we're gonna just wait for the rates now, or the trade war, and let's now, we're using all this logicalness, we're going looking at macro just to start reacting off Trump tweets again. I can't believe that. I think it's hinting at more, and I think it could be a further retaliation from China, deteriorating relationship with China, what we have going on with Iran, oil, all that type of stuff, and even in general, if anything else develops negatively. But I do believe the Fed is going to have a better eye on that, but that was the key. Oh, why did I go on that one? But if we don't slip it in the next few days, so let's say it does rip up and we don't see volatility in the market, because again, that did happen on one of the last Fed meetings. It dropped for 2 days. We had positive fake BS trade news, and then boom, that's what started everything back up again. So if that does happen, again, I don't believe it, but it doesn't, the market doesn't care what I think. But if we don't see that big drop, then the big drop is going to come July. It's going to come around the July meeting or somewhere either before that, or some stuff is going to develop, and after July, we'll see that. Again, we have to look at the probabilities and see, but that is going to be the big thing. So lightweight tomorrow, though, I would expect the cuck, gap up, chill at the top, or even open unchanged, rally, go to the top. Honestly, the best, this is one on the watch list, kind of look at Johnson & Johnson. This is kind of what the market could look like today. And it kind of did look like that here, but you could kind of see, you got more volatility. I think it could just do this, scare people a little, hang out, and then go from there. But if the value stocks sell off with no bigger rip, that is trouble. So there's that. And now I want to talk about the Fed Reserve meeting, because he did say some stuff. I'm sure you guys want the plays and all, but this is very important because it's going back to what he said about July, Powell and everything. And he said I said it was kind of dark. He kind of hinted at, he said all the central bankers, the key right now in this modern environment, he said when it has to do with timing and implementing these tools, the key is either having a decline that lasts for a little bit, or if you go too early or too late, it could lead to a downturn that goes very, very down. So I kind of view it as he was saying, it's either going to turn into a recession that could have minor impacts, or it's going to be a depression, Great Recession, something of that nature. So there's that, but I'm saying here that no change in the IOER signals they maxed out their pseudo tools they're willing to use. And that's, I say it as a question because I don't know. It could be, but the fact that they didn't change much except for their stance on saying removing the patients, but they didn't add anything extra, like they've been doing the last 3 or 4 meetings. So it's begging the question now, especially with how he's been talking, is it maxed out now? They've tried everything they could. It's held the market up to this point, but now these other influences, if there is other factors, it's just not going to suffice, or it can't be sustained that long. is the next and only available tool rate hike? And if so, that could even be a rude awakening for the market. But let's get into it, baby. Let's get to the plays here. So, actually, I already put this up, Nordstrom's. I like this one a lot. They had an unconfirmed rumor today, and it went up, and it just held. Comparative to the market, it went up about 3%. That's huge, 3.5%. And it kept going up. CNBC gave it a little pump and talked about it. But there has been, it's kind of like a T-Mobile situation, and a lot of these, it's been going back and forth with these rumors. So, and that's happened for months, so you don't know when it's going to hit. But the fact that today it came out and the news was relatively nowhere, and then it hit CNBC, I think something's brewing. We got some plays in there. I'm going to like it and keep holding that. Another one is YY. It had a huge dump there at close, and I thought that was very, very interesting considering some of the other Asian stocks. So it really stuck out to me there. I think it's very important. I did get a play there. I think I got a July right at close. But keep your eyes on that and watch for the interaction. But again, just because anytime YY is in this range and has these big drops, it's been having some weird difficulties. It kind of could move like JD, and I would watch JD as a sympathy. But again, that volume is really what got me. The volume at close, the volume for the day, very, very high. You really don't see this for no reason here. So keep your eyes out on that. That's going to be good. And then lastly is going to be Apple, and it's going to relate to another play I want you guys to see, but simply it has to do with the end of the market. This is what I really want you guys to pick up on. It had the boost with the Fed, but when it came down, it really came down, but the market held up. And then this doesn't look like the same type of bounce. They still closed red when the market barely closed green. So this is kind of your cat dog. This is what I was saying yesterday. You're having other stocks hold it up, like Boeing. And Boeing did actually very bad today, but there's going to be the value stocks who, even energy, finance. It's hard to say, but there is stuff keeping the S&P up because the bigger drivers where a lot of the money is, it's not reacting the same. So watch that. And another play that looked exactly similar, and I bought puts on them, is Caterpillar. We did a spread on it, and we'll show you guys, and we'll talk about those. But again, similar move, and Caterpillar is kind of like Apple. Again, Apple even announced they're going to be moving their factories to China. That could have an effect on their costs in general. But Caterpillar, because I'm really starting to look again. This is October. This is that December point that we're comparing it to. If it does fall here, Caterpillar likes to do this. It likes to drop big, come back up, and really it always likes to come back up in huge fashion before it sells off. So it didn't do it as much, but I think it's kind of getting to the weakness, but it's no coincidence it's at these levels right there. So I think the market is telling you something and pricing in and showing you a clear level of where the market is finding value here given the climate. So watch out for that. We did a put spread on that one, a vertical put spread that we bought. That's going to be a good one to watch. Watch Bank of America. I played the weeklies on these. I think those could be exciting tomorrow, but even then, I do want to set up a play. I'm already in XLF, but watch the banks too. They could have a muted reaction tomorrow, believe it or not. Either tomorrow or Friday, there's going to be one day where the banks aren't going to move as much with the market, and they will actually, again, or banks could sell off hard, and they might save the market on Friday to cause that cuck, but I'm expecting a drop and then a relief and then let it to continue, kind of how the first drop moved here today this morning. And then lastly, Boeing, it dropped a lot, and I said watch for it to kind of do its thing because, again, this could weigh on the Dow heavily. But the thing was, all the defense stocks kind of look like that. Even Lockheed started dropping as well, too, but not as much. But Raytheon and Boeing, which was weird considering the situation. But those are going to be important to watch. Keep your eyes out there. And now our favorite one, Akerna. This is the first weed stock on the NASDAQ. And the best part, they're based in the United States. It's an IPO, and it doesn't look like it because you could see the chart back here. They did a private placement. So I'm going to make a video on this because we need to explain the warrants. There's current warrants that you could get, and we picked up some of these. But you have to be careful. Damn, those are at 477. Oh, never mind, 560. So, yeah, we actually doubled up on those. I bought 200 shares of those at 360. They're almost double, so we're going to free share those. So we got into that one later and held, but we played in the morning. We got here at around here at 29. I thought it was a bad entry, but again, go watch the recap. You could see my logic as to why I held. I just came up with a plan of how I'm going to prevent losses, or if it does lose, what I'm going to do. I took an instant loss, but then it came up. That is how you day swing. So again, like this video, hopefully YouTube will recommend it, or go search day swinging. It's on the stream alerts as well too, but it's on the main channel. Go look into that strategy. I had someone come in and say they did a lot of things using that, and it helps. So do that. But I'll show you guys here. You can see we bought it at 7.54, which is 10.54 Eastern time, but we bought 100 shares at 2.905, and we held it. So imagine, and I sold out half at 44.43, took my profit back. So as you can see, take a look. I bought in for $2,900 total. I sold out half for 22. The rest is all profit. I'm just going to hold those. Now it's like literally imagine you got Tilray the day before. Now, I need to do an investigation on this company, and I'm actually going to go deep into it. I actually even left, I already got a hold of some people at the company today. I'm very curious into it because if the situation with the warrants, it was very hard to determine the float. And again, I did this on the filings. I'm assuming it's around 14 million. They have authorized 70 million shares, but it seems like 14 to even like 20 million might be the number, maybe even 7 million. So it's very hard to see, but there's big spreads. A lot. It's a very convoluted play right here. Even the warrants, if that's why the warrants are a poison pill too to prevent a buyout or a hostile takeover. Because literally, that's why I started calling the company. I was seeing this today. I was legitimately calling my boys in China, and I was saying, well, if we could pull something off here, I was like, I'll just buy this whole company. I'll do a hostile takeover. I'll buy 51% of the float, but apparently they've accounted for Josh Answers in the Colt. So remember, the Colt, baby, that's how we're trying to do it. We want a hostile takeover Berkshire Hathaway one day. But I'm going to look more into this and again, do an investigation. So thankfully, I made the play free. Even the warrants, I'll probably sell out half of those tomorrow, make them free. Maybe we'll let them ride a little bit because, again, even after I sold at 44, it almost doubled. So think about that. So even then, my shares have already doubled on the remainder. It's crazy. It's going to move fast, but the best part is it's going to be like Beyond. It's going to have an opportunity. It is weed related. It's going to have a bunch of hype. I think it's relatively unknown still. I don't think a lot of people know about it. There's only like 2-3 million volume, and you saw that move. So watch out for halts and other stuff, but we'll see what happens with it. Be smart with your risk management. Don't chase it. Again, you see the hype now, but you saw Beyond go up and drop and this. And isn't it crazy? You got the $70 fast. Y'all were complaining about fake meat, huh? Oh, but when it's about weed, huh? It's not, you guys can't, you could talk trash on the vegans, huh? All day. Oh, Beyond Meat is fake meat. Oh, but the weed stock comes along. You're like, it's undervalued. We should go buy this at $70 a share after it was at $10 IPO yesterday. You guys are savages. But it's going to be a fun play. Watch how this plays out. We're going to be watching this for sure. Beyond Meat was so yesterday. I'm over that. Actually, I'm really not, but I'm on to Zoom. And that's our next play. This was going to be a favorite, pushing to the wall. The premiums are still expensive. That 4% move today did not help us push it to the wall. It kind of did, but that's going to keep the premiums up. But watch that. I still love it. You could even watch that in relation to Beyond Meat. But then my last play, you think you know what it is, but you do not, because this is very un-Josh Answers. McDonald's, but the point I want with it, it started to show some weakness, and this was the point I was saying. If the values start to go, it could signal trouble. Just like Caterpillar, it's not at the same spot. It's actually trading higher, so it looks like the market is supporting it more. But the point is, you could see it run up, hit these tops. This looks just like November, December all over again. But why I'm looking for weakness, because the minute it does show big weakness, the wobbly treadmill, this could sell off a little bit, so I did a put spread on that one again. So there's that, and now let's get into the option plays. Really, I just want to show you guys this play so you could understand it. This was the shittier version. I did August, and it's really far out of the money, and I want to explain the logic so you guys could kind of see what's going on. So the cool part about this play is if you did it and you wanted to see how it would look, this is what I'm talking about, the risk reward. You go here. It's literally saying 0, but actually we have to end up paying. You're going to have to do a net debit of 1. It'll cost you $100. If the price winds up at August below 174, you make 150 grand. Now, that may sound awesome, what we're going to make, but this is so far out of the money that's not going to hit. So why did I buy this? It's already doing it. This is what I want you to see. The point is we bought these 175s and then we sold the 160s. By selling these at 1 penny, it covered it. We paid 50% less for these. But this is why these are the bottom feeder options. Volatility isn't high. The VIX is still at 14. That's actually lower. So these haven't picked up in volatility, especially the further August contracts. So what you're going to see one day is if there is a big move or big drop, they're not all going to look like this. You won't see this 2, 3, 4, 4, 4, 4. They're going to start looking more as you get closer to the money. They're going to start having, wider spreads, wider different bid and ask. There'll be a difference. But again, here's the key. Look, $5 down. So $15. So 270 to 255 is literally the same distance of the calls we got. And those are 64 cents. These are $1.50. You'll make triple. So that's what I'm trying to explain here. That's why I made this play. But again, you only benefit off of extreme, crazy, stupid volatility. But by being a big difference here, it's a cool play because you could buy them and sell them at the same price. but you got a $15 difference if it does go there, but you have to account for it being extra far out the money. This chance has what? Well, probability of profit, drum roll please, less than 1%. So put that into perspective. Let me even show you a better play. This was the play I made not too long ago, and I actually prefer this play, but the option contract already changed, and I already made money on it. So you could see I like this one better because it's the same concept, but it's a little trickier here and it's a little further priced, but this one can actually get in the money. It's a standard, it's beyond 2 standard deviations, but it's not 3 standard deviations, which is crazy. You still need a crazy move. But I bought 100 of these, I believe, at $7, so they stayed the same price, but then I sold 100 of these at $6. So pretty much it cost me $200 to get 100 shares here. There's a $5 difference in the strike price. I've already made, I can buy these back. I can make $100 here, but then these dropped 1 penny, so I'm break even on them now. But I like the risk reward on that one way better because this is the point. Look at here. I'm going to show you guys when we get here. This one's hard on the bid because, again, now take a look. If these are 4, 4, and 5, oh, man, you could do that same thing. You could pretty much buy one of these if you wanted, or actually you would have to go for the 5-cent one, and then you could sell the 5-cent one and sell one of these, but I think it's the same distance. It's just like the other one. But so when I bought mine, I did it at a net debited too, but it says $49,000. I think it's supposed to be a little higher here, but when I did it, it was around $200,000. That's actually interesting. I want to figure out why, but maybe it's because I don't know if Tasty would refresh there. But again, the concept here, you're buying these, you're financing it with this, you'll make only up until the gap. You're capping your gain, but even as you can see, the one further out the money. But why I like this, because if you come here, it says if the price by July, the next 33 days or the next 30 days, if the price is less than 236, you make 50 grand off of $200. But the key is that 239, if we went back to 239, that is actually, surprisingly, we've been there. It's right here, and I think it's because the price, because yesterday, I think it was even, the play I have was a different one, I think, because of the price we paid. And, again, I think that really does change a lot. Because, again, mine yesterday, it said my max gain on that play should have been 200,000. That's why I was kind of shocked at the 49, but we've already been here. We've been below 239. But, that's a big drop, assuming it comes here. But if you do the math, that's a 15% move. So if there is a black swan, you literally just at around less than 2 standard deviations, if there is a 15% decline from the top, and again, I like that number 15% because I think this just from where we were at in beginning of the month, this is a 10% move. So it's literally saying we retrace all the gains in a month, and we could do that literally in 3 days as history has shown us, and then it goes down 5% from there. It's going to open up some opportunities there for you. Because, again, that one's saying your max profit, that's assuming it gets there, but that play isn't too far out of the money, and that's why I liked it, because it just allowed me to finance a closer to the money trade. So I'm going to look for some of these. We did plays like this today, and you guys could see here, these were the 5 plays we made. Again, I sold out of those Kerns. Look at that. You guys could see that one too when we bought it. And I did the same on McDonald's. I'm using this strategy, these vertical spreads. I did on McDonald's and Caterpillar to pretty much sell a put below it. I'm capping my gain, but it's financing me trades with time. And pretty much, even though some of them are pretty far out the money, like a 175 on McDonald's is far out, even on Caterpillar, but this beats a YOLO weekly any day. I have until August, and this is $9 per 15 contracts. I spent $150 for an August YOLO play, essentially. And then this one is $15 debit on, 5 contracts. That's $80. I played $80 for an August YOLO on the put on McDonald's, and both of these plays, if they do hit, the max gain is like $2,500 or $3,000. So smaller risk, the reward's not crazy, 30, 40,000, but again, that's because these are actually within like a 1 standard deviation move of the stock, so it's about getting closer to the money. So any of these plays, you guys, even those SPY puts, whatever, if you don't understand the risk and how that changes, and as you're seeing, even if I redo the play, it's showing different metrics. So you just got to make sure you have an emphasis on really understanding it before getting into that. But be smart, even better. I got more plays for you guys, but I'm holding them hostage. You guys did amazing on the stream, you guys. I really appreciate it. Everybody who liked the video, everybody subscribing, commenting and posting in the chat. That's exactly what we need, you guys. I'm telling you, it was so helpful. Go watch the replay if you missed it. People were throwing out their plays today. They were like, oh, I'm up 30 on this. And I was like, wait, you're up 30 on that. I got to go look at it. It just creates a way better environment. It makes me a lot more excited, and it feels a lot more equitable for myself and everybody else, because now I'm not the only guy. You guys are just copying or looking at my plays. Now I get to see your guys' plays, and if you're telling me you're down or up, if you're up a lot, I know not to touch it. If you're down a lot, now I don't have to scale in to know it's down 50%. We could all benefit from that. So again, it sucks if you do get down. It's also great if you do get up. So this is how you flex if you guys are up. Just say the strike price, the date, and what percentage is up. Simple as that. But it was really awesome, guys. I really appreciate it. Keep it respectful, positive in the chat. We're live 30 minutes before open. I'll see you there. Get ready. Watch out for the macro. Just watch out for everything. Let's go.